Welcome to another technical analysis video. This is Samuel Morton. In this video we're going to look at support and resistance. I mentioned support and resistance when price ranges, when it moves sideways. When price does move sideways, we have something that looks like this. We have a resistance area and a support area, and price moves between the two and moves in a sideways direction. But we get support and resistance throughout the markets, no matter how price is behaving. And just like a range, when price reaches a resistance area and reverses, or reaches a support area and reverses, support and resistance areas are created when price reverses in markets. Major support and resistance and minor support and resistance. We'll look at the major support and resistance first. Earlier on in this course we looked at trending markets and how price behaves when it trends, like this step motion in the market. If price is downtrending, eventually it's going to come to an end. All trends end, and price will either range or reverse and go on an uptrend. The same with an uptrend. All uptrends finally do come to an end. When this uptrend ends, we're either going to see price range or start downtrending. When these changes happen with price in the market, that is when major support and resistance areas are created. For example, on the pound against the dollar, the chart we've been using throughout this course, price is clearly downtrending and then reverses and goes on an uptrend. This area where price reverses would be considered a major support in the market. Throughout June, we have an uptrend. Which becomes a downtrend. This area, where price changes direction, would be considered a major resistance area in the market. Now, why is it important to know these areas of support and resistance? Well, when price reaches these levels once again, price could react in the same way. A resistance area here that changed an uptrend to a downtrend could act as resistance in future. A support area in the market where price changed from a downtrend to an uptrend may act as support in the future. Now, why does this happen? Why do these price reversals happen in the market? It could be for a number of reasons. The first major reason could be because of fundamental analysis or news events. Something could have happened in the news in this area that changed investors and traders' perspectives of this particular instrument and decided to start buying this financial security rather than selling. Another major reason why price may change direction or behave differently is because the level price is currently at was a support or resistance area in the past. And traders use these levels of support and resistance in their trading. So if we mark this area where price reversed, so here's our support area, price reached this area down here, came up, came back down, reached this area again, and then went on an uptrend. If we also mark this area where price uptrended and started downtrending, price came up, was rejected, came back down, went up again, and was rejected again, and started downtrending. And we'll look at these areas with future price data. Obviously these areas are broken, support and resistance can be broken, and when they are broken, resistance can become support and support can become resistance. For example, if price closed above this area of resistance, it could then become a support. This is sometimes referred to as the ceiling becomes the floor. If a support is broken, price closes below the support area, it can then act as a resistance. A floor becomes a ceiling. So let's look at these support and resistance areas that we've marked. You'll notice that this support area is broken here, but comes back up and acts as support for this uptrend. Once again, this resistance area that we've marked, prices come up to this area. These are not specific levels in the market, but areas. Prices reach this area and prices change direction, or been rejected. There are also minor support and resistance areas in the market. Obviously, when price is downtrending or uptrending, we have a step in motion. At the end of each push and pullback, we have minor support and resistance. These are also worth marking. So let's look at this downtrend and mark a minor area of resistance. Let's use the end of this pullback and the start of this push where price changed direction as an area of resistance, or a support and resistance area in the market. You'll notice that this level has been used before. When price was downtrending, we had this area where price slightly retraced before going for another push. If we focus on this level of support and resistance, you'll notice it's used once again on this uptrend as support on a pullback. If we continue, this support becomes resistance. Price closes on this downtrend below this area of support. When price pulls back, it acts as resistance and marks the end of this pullback. This level is used once again on a pullback and the start of a push on an uptrend, and is used again on this push and pullback as support. Thank you so much for watching this video, and please continue with this course and view more.